Guys, what's going on? My name is Ryan. I trade ETFs and I like to make videos of the technical analysis that I'm seeing in the charts. So today we're going to be looking at natural gas, represented by the ticker NatGas USD. And we're here on the weekly chart, and I'm noticing a very interesting common pattern that we've had twice before, and that is the diamond continuation. You usually hear about diamond bottoms or diamond tops. They're very famous for the people that do point them out, but I wanted to talk about the diamond continuation pattern in this situation. So I have three of them here. This is a bearish diamond continuation, it has 8 touches. This is a bullish diamond continuation, it has 8 touches. And currently over here we are seeing what I hypothesized to be another diamond continuation pattern for the bull side, and it has 8 touches. So let's talk about this first one. Where am I getting my 8 touches? Well, if you imagine this, diamond or this box pattern around it, I would say that this would be 1, 2, 3, 4, 5, 6, 7, 8, and then we fall back lower. Over here on our most near and previous bullish one, we have our 1, 2, 3, 4, 5, 6, 7, and 8 before we move up higher. So where are we at over here on the weekly chart? We are at 1, 2, 3, 4, 5, 6, 7, and 8. So I like to look at fractals in trading. I think looking at previous price history is not an absolute trading method. However, one of my favorite quotes is that the market never repeats itself, but it rhymes. And I like to have everything that I can in my toolbox when I'm trading with my own money. And this is just something that I'm seeing. If you notice over here, you see this bar pattern right after this big drop below. We have this kind of doji middle pattern. If you look over here, we're starting to have this doji pattern. And, this just kind of gives me some confidence as to what's going to happen as far as whether or not this is a legitimate diamond or not. So what are our targets here? Well, we would look at our center line from our absolute high to our absolute low, and we would draw it from our previous low to our first touch of the trend line, and that would be right around here. And so this is the measured move upwards, and therefore our clone would go over here, and if this is the breakout point, this would be our measured move target as far as this bullish triangle goes. And let's see how this fared on the previous bullish diamond here. You see that that's a fairly close estimate within a couple points of the absolute bottom, our first touch here. Let's go ahead and clone it and see where it brings us at the top to the point of breakout, and we see that this is fairly close to the absolute top. So this would be my measured move target as far as natural gas goes if we do decide to break out with conviction above this channel or this resistance line right here. So from the weekly, let's move to the daily. I kind of have this hooping pattern that I've been seeing, and I just wanted to draw a channel type of guiding visual, drawing to represent where price is in its path. And so these are each clones of each other. But there's not really a curved channel line because we do see price kind of coming up and making this curvature move. There isn't, a straight line that really fits this chart. I see it more as a curved situation going on here, and therefore this bottom line represents our supports. We've been supported 4 times off of this. This blue line is kind of our central line. You can treat it as maybe a moving average for price, and this is our resistance line. We've been rejected off of it several times here. Another interesting thing to note here on the daily chart is the hidden bullish divergence that we have here. As far as our CCI goes, we have this black line right here as our bottom, and then we have a lower black line over here while price rises all this way. So this is a hidden bullish divergence. And so what is a divergence? Well, the classic one is where price makes lower lows while our oscillator makes higher highs. The hidden one is where price makes higher lows and the oscillator makes lower lows. The only difference in the oscillator is that you're looking at different places in the oscillator. For example, since price is making lower lows, we look towards the lows of our price and our oscillator. If we were looking for a classic divergence and price was making higher highs, we would look for the top of the pattern to see our price moving higher and our oscillator moving lower. So in the hidden divergence, you look at the opposite. So if price is moving higher, you actually look at the bottoms and see what's going on here at the bottom. So this is the classic representation of what a hidden and classic divergence looks like as far as price goes. One more time, we have a low and then a higher low, and our oscillator makes a low and a lower low. So let's go back to the chart and compare that. We have our oscillator making a low, and then a lower low, and then a lower low again. We have our price making a low, a higher low, and a higher low yet again. So that's one hidden divergence that I'm seeing in the chart, and that is a bullish divergence. Sort of an interesting thing to look at is, I'm looking at fractal trading and going back into price history to try and look at previous price moves to kind of give me some sort of idea as to where price might head this time. And so if we just clone the bar pattern that we see here and we were to drag it over here, it's kind of interesting to see how close or similar these patterns are. Especially on this right side, we have this two humps right here and a low and then a lower low. This side over here is very similar both in overall, price move. So the bottom here is fairly close to the top here, which is fairly close to the top here, which is fairly close to the bottom here. So the price overall move is fairly close in my opinion, as well as the direction and price and time that these moves happen. So if you were to kind of accept this as being legitimate, you can see the price move that occurred after we broke above this double high that we have right here. We move much higher than this previous high over here. I'm not saying this will happen. I'm just saying that it's what happened in the past. So let's go ahead and delete that, and let's go to the 2 hour and take a look at what's happening on the 2 hour chart. So on the 2 hour chart here for natural gas, we can see that we have kind of been in this descending wedge formation here, with our bottom coming in here. We were supported by this once, twice, 3 times here, and as far as overhead resistance goes, I drew this bold black line here, and it served as fairly firm support, and this would be our apex for that descending wedge pattern that we have right here. Now, what I like to see sometimes in descending wedges is for price to, break out of this wedge and then come back down to retouch it, try to get back into the pattern and get rejected or supported here at this level. And I think that this might be the case for natural gas here in the coming days and maybe next 2 weeks, is that we might move a little bit lower, and that's why I have these 2 buy targets right here. We can see that previously here in the price, this blue line used to be our old resistance right here. We were rejected once, twice, 3, 4, 5 times off of it, and we finally decided to break out above it, which is very positive as far as a medium-term perspective goes. However, we ran up too fast, too high, too quickly, and we set in a divergence right here. This is the first thing that tipped me off to set a couple stop losses, and it's where our oscillator, it's a regular bearish divergence, our oscillator makes a high and then a lower high, while our price makes a high and then a higher high. And you can see what happened eventually after the divergence took hold here. So I labeled this as our old resistance right here. I think it's going to be our new resistance. We had a nice pop right here to try to get back above this line, and I've got a feeling that we're going to be rejected off of it and then roll over and move a little bit lower yet. And so I have 2 buy targets here, and we'll get into those on smaller time frames, but this is our old support. I'm not sure where the new support is going to be. It might be right here, or it might be a little bit lower, but this was the old hard support line here marked in red. Let's go to the 1 hour and check out what's happening there. And here in the 1 hour, we have this blue line here. I was also kind of seeing a megaphone pattern where we come up, we have A, B, C, D, and then E. And we drop down even further, and then we decide to break out above this pattern. And as far as Fibonacci goes, we draw this from our swing high down to our swing low down here, and it spits out this 38.2% support level, 50%, 61, and 78. Looks like we were kind of supported and rejected off of the 61.8. We came down, and now we're being supported by this 50% Fibonacci level here. On the 30-minute chart, we get to go back and see where I was wrong in my old analysis. I said this was my target buy for a couple of reasons I explained in that. After we set our peak right here, I figured we were going to roll over, and I had this target right down here at about the 2.9 level. We ended up coming down to about the 2.85 level, so I was wrong. In this situation, I should have had my target be back down here at this previous support line down here instead of right here, where there was this consolidation over here that was fairly weak. We had this bull flag here, and the measured move would be from the start of the flag, and you draw this to the point of breakout, which is above this level, and I had the measured move coming up to about 3.68, 3.7. We got all the way back up to 3.09. So this was a fairly accurate measured move in this situation. But from this chart here, I have this kind of new support line that I'm predicting and anticipating. I have this coming from the ultimate low over here, and it touched this line several times before taking off, and so I just drew this and drew it out, extended it a little bit, and this is kind of the rationale for my first buy target. I do think we're going to get rejected off of this old resistance, becoming new resistance here, and I think that we were supported here by the 78.6 once. I don't know if we're going to be supported a second time. My guesstimate would probably be no, and so where's the next support after this? I think it might come from this new black line that I have drawn here, and that would make sense as far as, we have some previous consolidation here in this range. I don't think we're going to drop all the way down to the absolute lows. However, if we do, I have my buy target number 2 here. But I can see us coming down to the previous area where we broke out at. So this would be the breakout price right here, and we'd move higher. See price touches this once, twice, 3 times, and then we finally decide to move higher. I can see price coming down to this range over here, getting supported by this black line, and therefore my prediction for buy target number 1 is going to be right here in this range for about 2.95, 2.94. And I kind of have this drawn out here on the 15-minute chart, where this is old support, this is new support because we broke out at this level, this is old resistance, and this is new resistance by this red line right here because price comes up to test it twice before rolling over. We broke through our old resistance level, and this is also, my rationale for my buy target number 1. If we do decide to break even lower below this, we do have pretty firm support down here at my buy target number 2. So by these blue arrows, this is my predicted path. I think we're going to get rejected here, move down, come back up, break above this old resistance line. Old resistance becomes support. We're going to flag out and touch this again, and then I think we have a good shot at coming up and hitting this new resistance. And this black line right here is actually the top line for my diamond continuation pattern that I talked about on the weekly chart. So it'd be very interesting if we broke above this level and then we were very close to the top of our diamond or our diamond pattern. If we break out above this, then we'll just have to see what happens below there. However, if we were rejected off of this, I could see us breaking down fairly hard. So that has been my analysis, my predicted price path for the natural gas commodity next week, and I really hope you guys enjoyed this analysis. If you did, you got anything out of it, please like and subscribe so you can get my weekly and daily videos on the stocks that are making interesting moves every week. It takes me a lot of time to make these videos, so please like and subscribe, and have a good weekend. Happy 4th of July.